investors, and this is a bigger picture story, pulling more than you pulled more than $8.8 billion out of global equity markets last week alone as stocks continue their rout around the world from market instability in the Middle East and then the Far East. So are stocks poised to make a turnaround, or is there more of a heartache to come? How do you play it? We thought this is a perfect day for a good old-fashioned bull-bear debate. Joining me now, National Alliance Securities global strategist Andy Brenner, feeling bullish in many different areas, interestingly enough, and Euro-Pacific Capital chief global strategist Peter Schiff, a bear, but in specific areas. Andy, I want to begin with you because it's tougher to be a bull on a day like this. Why are you bullish and where?
Well, as far as being bullish, I think you're on the verge of capitulation. I think you're seeing it in oil now. I think you're seeing some of it in stocks. You've reached the correction area in a lot of areas of different stocks. And as you just said a moment ago, you're in the bearish territory in the Russell.
Okay,
the Russell.
But this is a big list here. Stocks, bonds, emerging market, and high yield. You're not worried about a junk bond bubble?
I am not worried about any of these, but I will tell you that I'm not stepping into these right away. I just want to see a little bit more of blood on the streets. And I think sometime this month, you're going to actually get some very good returns by stepping in. I'm part of the buying on breaks type stuff.
Okay.
I really do.
Yeah, he's
I mean, listen, you have the unemployment number that just came out, 300,000. You know, you've got different aspects of the economy that are actually looking pretty good. You had 2.6 billion miles put on by cars. You've had record sales of cars. You just had stimulus, from the House. So I don't think things are going to be that bad.
Okay,
but obviously the markets are bad right now.
That's our bull. And Peter, you're our bear. You just heard Andy roll out some of the positives that he perceives to be. I know you disagree, and it would be easier to disagree on a day like this. What do you see, and are you buying anything right now?
Well, first of all, we're nowhere near capitulation. I think we're still in denial. Remember, this entire bull market was about the Fed, and the Fed finally pricked its own bubble in December, and there's a lot more air that's going to come out. The market is going much, much lower until the Federal Reserve comes clean, admits that it's not raising interest rates anymore. In fact, I think they're going to have to launch QE4 to save this market, and that is exactly what they're going to do. In the meantime, the Great Recession, which was interrupted by the Fed, is about to resume unless the Fed comes back. But of course, ultimately, we're going to die of the Fed's cure, which is actually worse than the disease. But yes, this might be a buying opportunity. It all depends on how quickly the Fed comes clean. But I still think they're going to wait a while. They're playing a game of chicken. But this economy is in lousy shape. When you hear people say, oh, it's contained to manufacturing, it's just an industrial recession. Yeah, it's as contained as the mortgage problems were contained to subprime. Or if you remember when the NASDAQ bubble burst, by 2001, the S&P and the Dow still hadn't rolled over, and people were saying, well, it's contained to tech. It wasn't contained then, and it's not contained now. People are still in denial. These are enormous problems, both in the markets and the economy. The Fed reaped the wind, or sowed the wind, and now we're all reaping the whirlwind.
But, Peter, you still have some of the lowest interest rates in the world. You've got two central banks that are still, full throttle as far as easing. I don't think you're anywhere near the 2008 bubble or the 2007 bubble. This is not an internet bubble. I think things are going to bounce back. And I still think the economy is going just fine. Granted, it's choppy, but you just have a 5% unemployment number.
This bubble is bigger than those previous two bubbles combined. And even though interest rates are still low, they're not low enough. It's like when you get a big heroin habit and you take back the dosage, it's not enough if you need a certain amount.
Peter, why isn't gold bouncing more? Silver is a mess, too. I would think that those are the plays that you like, and that there is no fear trade here at the moment.
Peter,
Liz, for the same reason that the dollar is still rising. People are still in denial about the real extent of the problem. People still believe in this phony U.S. recovery, like your other guests. You keep talking about the low unemployment rate. These are all lagging indicators. And the only reason the unemployment rate is down is because so many people have left the labor force or have settled for low-paying part-time jobs. But look, companies don't lay people off because they anticipate a recession. The layoffs start when employers are surprised by a recession they didn't anticipate.
And we can
if
say
you look
right
at
now,
all the economic data.
Yeah, it doesn't look like we're seeing capitulation just yet because the stock market has been at least in the green earlier today at one point. Andy Brenner, Peter Schiff, thank you very much for the bull-bear debate.